Well, good morning. I'm Ken Biberai, and welcome to Coffee with Ken, a thought and leadership series at the nexus of business and politics. I'm thrilled to welcome you here today to Metropolitan Square in the heart of Washington, D.C., directly across from the United States Treasury Department and down the street from the Federal Reserve. Also want to thank the leadership team of BXP, Boston Properties, for welcoming us here today, for their support and all the work they're doing in the D.C. market, as well as around the country and beyond. We're excited because we have a very special guest in town for our in-person Coffee with Ken today. We have Lynn Martin, the president of the New York Stock Exchange, here in person. Lynn, good to see you.
Thanks for having me.
So it's been a busy week for Lynn. Today we're going to be talking about the power of public markets, but she started the week with Coffee with Kevin. Speaker McCarthy was at the New York Stock Exchange. But no offense to the speaker, Lynn came down to see us here for Coffee with Ken. So we're thrilled that you're here. And we started upstairs with a funny point. You would love to be in DC more often, right?
Absolutely.
So tell us about that. How often are you here? About coming back and being in person.
Yeah, I've been here. I took the reins last January. What an interesting time to take on this position as president of the New York Stock Exchange. I've been here probably about 2 or 3 times a year. And as I was saying to Ken, I would love to spend more time here, but what we're seeing is a lot of our regulators in particular are doing Zoom calls and et cetera, so it just makes sense to do those from New York, given the amount of activity we have going through our own building every day. And as Ken said, we've been really fortunate, at least in the last 6 months, to attract so many global leaders to the NYC. So for me to leave 11 Wall, I got to have a full agenda, particularly when you consider we had more than 20 global leaders come through 11 Wall last year. And even in the last 6 months domestically, we had Secretary Yellen come to do a roundtable with a variety of our CEOs in December. We had Secretary Raimondo come in February, and as Ken said, we had House Speaker McCarthy give his major economic address around the debt ceiling and those negotiations from our iconic ballroom earlier this week.
So help set the table. Everyone's heard of the New York Stock Exchange, it's iconic, but how big is the exchange? Number of companies, dollar value, what's the magnitude of the exchange?
So we're the largest global exchange in terms of capital raising and in terms of market cap of listed companies. We've got 2,400 listed companies, combined market caps around $35 trillion, and importantly, those companies represent 44 million jobs around the globe. So that is why we have so many economic leaders around the globe wanting to come to 11 Wall. They want to interact with those CEOs of those large, iconic, gold standard companies to talk about issues that are facing them, not just domestically in the US, but increasingly geopolitically around the globe.
So you mentioned you're a year in, a little over a year. So let's just think about that from a time perspective, folks, right? Pandemic's raging, but at the same time, the market's skyrocketing. You probably think, oh, this is going to be a piece of cake, right? We're on the up and up, but the timing of your entry last year was a little volatile, right? There's a lot of uncertainty out there. What has it been like? What were your expectations when you started versus now having enough time under your belt?
So I was offered and accepted the job the middle of 2021. Now, think back, that's just under 2 years ago. Record number of IPOs, record Dow, record S&P. The economy was doing really well. I took the job effective January 3rd of last year. I think I was in the job a whole 2 weeks before the volatility really started. And that, froze the IPO markets. Then fast forward a couple weeks after that, we had the conflict in the Ukraine start. And that meant a whole different layer of complexity. And you started to hear more about interest rates rising, inflation, more recently the challenges with a variety of the regional banks. So it's been a really interesting 16 months, but what it has really afforded me the opportunity to do is reshape the business and spend a tremendous amount of time with those 2,400 company CEOs. We're the first call for those CEOs because of our unique vantage point, because of our unique platform. They call us when they want advice, color, whatever the case may be, access to things that are going on in the markets, not just capital raising. It's a tremendously complex time to lead a business, to be the CEO of a business, and I am so proud at the amount of activity that we have going through the building and the amount of activity we have with our listed companies acting as their voice at such a critical time for business done in the US.
So you have this role where you have to react to these CEOs,
Yeah.
but then you're also leading and laying out initiatives.
Yep.
And one of the largest topics that's come out through the pandemic has been a focus on ESG.
Yep.
So talk a little bit about what you hear from your CEOs versus what inherently you as the exchange want companies to be thinking about.
Yeah.
And then as the last bucket, how that plays with regulators, right? Like there's a
Yeah.
lot of nuance in this, right? People want to be focused on ESG, but the implementation, the regulations, like I imagine there's a role you play
Oh,
kind of on
absolutely.
the advocacy side
Absolutely.
about how companies should be monitoring, tracking, implementing, et cetera. And Earth Day is on Saturday, so,
Absolutely, it is on Saturday. ESG is one of the big areas of focus that I've had in my tenure as president of the New York Stock Exchange. In my role prior, it was a big area of focus for me as well. Just prior to taking on the reins of the New York Stock Exchange, I started up and ran our parent company's largest business, which is the data business, it's ICE Data Services. And one of the products we were focused on rolling out in my tenure was our climate risk scores, which are non-opinion based, but they give you transparency to be able to measure climate risk and tie that to different assets in the capital markets, such as the US muni markets and the mortgage-backed securities markets. Every CEO I talk to has ESG on the mind. That is an unequivocal statement. There is no CEO in this day and age that isn't thinking about environmental, social, and governance aspects. Governance side, they're thinking about diversity on the board and good governance and things of that nature. From an S perspective, they're trying to develop programs and invest in their people. And from an E, they're clearly focused on carbon footprints and climate risk. But our role at the New York Stock Exchange is to not tell people how to run their businesses. Our job is to give them tools to get from point A to point B. And when you're a CEO and you're actually delving into each of those risks and how each of those risks impact your business, and then telling the investor community how you're mitigating those risks, it's an incredibly complex problem to solve. From a disclosure perspective, we've always been focused on giving folks tools that add transparency that are not opinion-based, as well as bringing together like-minded folks. So one of the first things we did in my tenure was launch something called the NYSE Sustainability Council. Because my view is that the Chief Sustainability Officer is having an increasing voice, not just in the C-suite, but also in the boardroom, as directors are trying to get their heads around what it means to be on a public company board and disclosing these risks to the market. From our perspective, though, forced regulation in this area is challenging. And when I say forced regulation, I mean requiring people to disclose certain aspects that are not yet ready for prime time. If you think about one in particular, Scope 3 greenhouse gas emissions. So those of you who don't live and breathe this every day, Scope 3 is your entire supply chain footprint. Think about a company like BXP. You think about some of these other networks, B2B networks. That's such an incredibly challenging score to calculate accurately. So having to disclose that and then be subject to an audit in the same way you're subject to financial audits, is an incredibly challenging proposition. Many companies prefer to voluntarily disclose that when they think they have a good handle on what that number is, but it's really challenging from a regulatory standpoint to require a company to disclose something like that. So to your point, we've been very vocal on the SEC's proposed rulemaking that came out in last June around required disclosures. At the end of the day, the CEOs are trying to do the right thing. They just need help in getting from point A to point B while focusing on their primary job, which is delivering shareholder returns.
So I love your bio because I like to think you're one of the original girls who code, right? Like you come at this from coding, from data, from technology.
I got my start as a programmer at IBM. That was my first job. My undergrad is a comp sci major, computer engineering. So I was a coder.
Amazing.
Before
it was cool.
Trust me. If you looked up cool in college, it wasn't me. At least as
cool now,
bucketed,
right?
at least as bucketed by my major.
Interesting. Well, talk about that experience, right? Like, how does that inform what you do today leading the exchange? How active is the exchange from a physical perspective, right? So much is done virtually now, right? Like, do we need a physical 11 wall? Do we need a physical exchange? Why not? And talk a little bit about advancements in AI and OpenAI, ChatGPT, right? Like, how are those things going to impact trading, financial markets, et cetera?
So once you're a coder, you just look at the world. If you're trained as a coder, you just look at the world as a coder. And in today's day and age, so much of markets is done electronically. I look at our own capacity and processing time, and we've had record incoming order messages. Now, those of you who don't live and breathe this every day, an incoming order message is a buy, a sell, or a trade. Those are the three buckets. We process 500 billion messages a day. That is more than 20% above where it was during the pandemic, which is an interesting fact point that most people don't realize, especially given we all saw March 2020 as a really interesting time in volatile markets. But the messaging rates that we have right now are 20% above what we saw during 2020. So tremendous amount of messages are coming through our system. So as a coder, obviously I'm looking at system capacity and performance. I'm approaching it from that perspective. You gotta have a good underlying technology in order to be the most transparent, efficient marketplace. That's table stakes. That's required. And you have to have leading ed technology as having that position in the markets. But the way I think about it is every company is a technology company. I don't know of one CEO that isn't using technology in some way, shape, or form, either from a customer acquisition standpoint or analytics about your existing customer base, or from a targeting standpoint, or you've figured out how to monetize your data. So everyone is a technology company, and if you're not, you have a path to become a technology company at your core. So it's something that everyone focuses on in this day and age. From a physical location standpoint, I'm a big believer that the human element dampens volatility. And because I am a data nerd, self-proclaimed data nerd, when I took the role last year, I would hear that statement over and over again, and I said, someone needs to quantify this for me. So that's, again, something that's probably a little bit unique. It was
redundancy. We're focused on redundancy at Coffee with Ken, too.
Cool. Hello.
There we go.
Should I be talking into this?
Yeah.
All right. So that is, the team has now proven out that, for example, the open and the close of a stock, the 9:30 and 4 o'clock, stocks that trade on us are 2 times less volatile at the open, 3 times less volatile at the close, and that's because of the role of the guys on the floor who are solely there to smooth out imbalances in the stocks that trade on the New York Stock Exchange while not sacrificing any sort of performance. Additionally, I think in the last year and a half, you pointed out that I took the job when we had Omicron raging, and it was the end of, I would say, the last big wave of COVID. I can't tell you the amount of people that come through 11 Wall. People want to be together. I understand and respect the hybrid model, but ultimately people are social. They want to exchange ideas. So I'm a big believer that having convening places, 11 Wall is the most iconic of those convening places globally, is incredibly important, not just because of all the market benefits I mentioned earlier, but because of the conversations that happen. I mentioned, the 3 US leaders that have been through 11 Wall in the last 6 months. They've met with our CEOs, and our CEOs are so happy to do that because they can take an hour out of their day and get firsthand information and interaction with those global leaders. The amount of investor days we have going on, the amount of board meetings we have with our listed companies is at all-time highs. Why is that? Because people truly believe that getting together for targeted conversations is the right way forward.
And look, we believe in that too.
Absolutely. Look how crowded this room is.
Yeah, and it's one of these things though. So are you planning to do more of these events? Or
Yeah,
curating
absolutely.
Them? Do you try to identify them on topic, or is it more like the speaker wants to speak and you arrange it? Like how is the inbound versus outbound?
It's a little bit of both. We do have quite a variety of folks that want to come through 11 Wall. We're trying to keep it to very relevant topics. Obviously, Treasury Secretary Yellen, given everything going on in the economy, very relevant. Secretary Raimondo, given everything she's attempting to do, very relevant. The debt ceiling, I think it was, a perfect timing for Speaker McCarthy to come through to warn of the challenges that are facing us in June, as opposed to waiting until June.
And let's talk a little bit more about that, right? We're in Washington. Our audience really tends to be a New York to DC crowd, so that's why we're so grateful you came down from New York to be
It's
here.
so easy to come from New York to DC. It's the easiest
Jake will
trip.
give you a table at Old Ebbitt. I mean, you can have a standing, anytime you want. But talk about it. What was the reaction, right? How are people in New York? I mean, as somebody who was a New Yorker for a long time, right? Like you kind of look at DC and it's kind of like they can't get their act together, and people, in DC think, people in New York are just focused on making money. And that's part of what we're trying to get at is like we need to spend more time together. We need to convene more.
I think when you don't convene more, you don't have those in-person conversations. You lose something. I mean, just having a conversation with someone in person, you can say it's going to be about a microphone, for example, gross generalization. But you'll wind up talking about the microphone, the speaker, the AV equipment. You'll wind up having conversations around the ecosystem around the microphone. That doesn't happen when you're on Zoom. What happens when you're on Zoom is someone's talking to you on Zoom, incredibly efficient, not disputing it, but then they're also doing their email. They're also looking at markets. They're also getting instant messages. And it's just the pace of technology because we are so used to now multitasking, having been home for a period of time, that it's really difficult to dampen the noise on those Zoom calls. So I don't think there's anything that really beats the interaction. But we've had the same challenges in New York that y'all have had in DC in terms of getting people back to the office. We're in 5 days. Our management team's in 5 days. My coders are not in 5 days, technologists. So I'd say we're probably about 65% in person. The coders come in, once or twice a week. They're still hybrid. But business people and the management team are in person. But New York, probably about 50%. Based on the surveys that a variety of the organizations do. And when you don't come back, not only do you miss the information flow, you miss the mentoring, you miss the culture building, you miss all of the stuff that makes your organization great.
Perfect. About the IPO market, the pipeline, innovation you're seeing out there, right?
Yeah.
Like I think before you came, IPOs were kind of every day, SPACs,
Yeah.
galore, et cetera. Then things came to a screeching halt.
Yep.
Like, how is that settled? What's the future look like from an IPO pipeline standpoint? And talk a little bit about, who you think the future companies that are going to be listed are. Are they technology? Are they manufacturing? There's a lot happening here.
Yep.
With Inflation Reduction Act, CHIPS
Yep.
Act, right? Like a whole new wave of manufacturing. Like,
Yep.
are you going to see that reflected in the exchange,
Yeah.
et cetera, et cetera?
So the pipeline's really strong. Unfortunately, everyone is queued up and waiting. And felt like people were starting to rev up the engines in February, and then we had the bank challenges in March. But hopefully those have stabilized, and it now feels as though, hopefully with the Fed print in May and some additional guidance in May, hopefully we're going to have an active second half. That's really what we're hearing, is an active second half. Companies, despite all that, some companies have gone. Companies that have gone where there is definite demand are the energy sector, given everything going on in the energy transition, the brown to green transition, a tremendous amount of innovation. It's startling to see how many of these companies have been able to use technology to really transform businesses. Another sector that I think is going to be popular, consumer seems to be coming back a bit, which is good. In tech's an interesting industry in general, because if I think about tech, there are so many smaller sectors within tech. So for example, you think about cyber. Cyber, I don't know one CEO that's spending less on cyber, irrespective of if they're trying to cut costs. As you move to a more technologically enabled business, you have to protect against threats. So cyber, I think, is going to be a very active sector coming out.
Got it. Interesting. Let's talk a little bit about crypto, right? I mean,
Yeah.
You had FTX collapse. How do you think about blockchain, crypto, listing, confidence in markets? Like, what are your kind of quick thought on that sector?
So I think what happened with FTX underscored the viability, long-term, medium-term, and the soundness that exists in our existing financial market ecosystem. FTX did not have a central exchange, it was not regulated, and it didn't have a central clearinghouse. And they were actively trying to promote a model which would eliminate the need for a central counterparty. This is something I feel incredibly passionate about, given that prior to starting up and running the data services business, I spent time starting up a CFTC registered clearinghouse and was COO of one of our parent companies' clearinghouses. We have learned time and time again through financial crises the role that a central counterparty plays. The central counterparty is the buyer to every seller, the seller to every buyer. We got through a variety of financial crises time and time again because of the soundness of that model and the good risk management around that model. And FTX showed what happens when you don't have that model in place. People lose assets. Bankruptcy trustees lose money, or lose assets, and bad things happen. People are harmed. So I think the whole crypto ecosystem is ripe to move into a traditional market structure. Now, that may not be a popular statement with technologists, but when I make that statement, I'm saying market structure. The underlying technology is interesting. It could be used to make an existing market structure more efficient, but the regulatory belts and suspenders that are provided in the traditional market structures are incredibly important. Blockchain technology, for example, is very interesting. It's kind of a variety of use cases that bring efficiency to settlement processes, to delivery processes, to logistical type of operations. So I think it's a great innovation, but I think the crypto market needs, and FTX has proven, the value of the traditional market structures that have weathered so many challenges time and time again.
Another initiative you're being more proactive on as an exchange are DEI initiatives.
Yeah.
Talk a little bit about your focus there, how important it is, what's your message to CEOs, and and just
so
diversifying financial services, right? I mean, the real estate industry, that's a big, important thing that is the industry trying to improve too.
yeah, going back to one of the things I was saying earlier, so I've been very focused on helping CEOs get from point A to point B on the ESG, the various initiatives. Diversity is one that they're incredibly focused on, because I don't think anyone disagrees that having diversity of opinion makes a business stronger. So that's great. It's a great statement, big statement. But how do I get from point A to point B? So one of the initiatives we have is a board advisory council that we pioneered in 2019, which brings together about 30 of our listed company CEOs, largest CEOs, that give us guidance as to how to approach this process. So it's the thought leaders in this area that have really focused on DE&I initiatives. Importantly, though, behind that is a database. That database has about 600 diverse candidates, which we've about doubled in the last year because we have spent so much focus and attention on this. And those candidates are all board ready. That's the first place a CEO tends to look, is how do I diversify my board? Does the person have audit experience, nom and gov experience, those types of initiative? Are they a financial expert? Those types of things. So we've been able to place about 40 people on public company boards. So, but now that the CEOs have gotten such a high quality group of diverse candidates for boards, now they're starting to come to us and say, hey, do you know a CFO? Hey, do you know a head of HR or a CIO? Hey, do you know a general counsel? Hey, do you know someone with CEO experience that I can look at from a succession planning, from a diverse perspective? So we're now not just getting the board inquiries, we're getting the C-level inquiries too.
So let's talk a little bit global geopolitical as we wind down. So how do you...
Nice small topic.
Small topic, right? But the
Nice.
topic du jour, in addition to debt ceiling, China's the
Right.
next largest topic
Right.
of discussion in
Right.
Washington and across the board. People calling for TikTok to be banned. U.S. companies can really be listed or operate in China, right? But Chinese companies want to be listed on the U.S. exchange. How do you navigate that? How do you address it? Like, how much pressure is now on you and the exchange to address your national security issues and threats from companies? And
Yeah, it was one of the things when I first started the role that I knew I was going to have to spend some time thinking about, and I was worried about, particularly when you looked at, I think the end of 2021 was when the first companies got tagged under the Holding Foreign Companies Accountable Act as potential targets for delisting. Ultimately, PCAOB found a path forward. The Chinese companies that wanted to remain listed succumbed to the PCAOB audit. So they played by the rules. The hallmark of our markets is having good governance, good rule set. That builds investor trust. We owe that to the investing public, particularly at the NYSE. We're the gold standard of rules. Our rules are the highest bar, you could possibly have in terms of listing on an exchange. So when the PCAOB announced the successful audit of the companies in December, I breathed a sigh of relief for multiple reasons, but most importantly, that those investors who were invested in these companies actually were able to see transparent financials. So as long as the companies continue to adhere to our gold standard of rules, they're fit for purpose.
got it. Ladies and gentlemen, Lynn Martin, president of the New York Stock Exchange. I want to thank everybody who joined us in person. BXP, again, thank you for your hospitality, welcoming us to Metropolitan Square here in Washington, D.C. Appreciate everyone tuning in. You can always visit coffeewithken.com to catch up on future sessions and past episodes, or follow us on iHeartRadio, Spotify, or Google Play. Until next time.